What's up, guys? Jordan from Condo here. Today, I want to talk about the wild gains we are seeing in suburbs housing prices. The suburbs are out of control. We're seeing, just in my opinion, an unbelievable market dislocation that is ripe for correction. And whether that means that Toronto, the core Toronto has to appreciate to normalize things, or the suburbs have to correct, I don't know, or a combination of the two, I have no idea. But the price gains we are seeing month over month, week over week in the suburbs is just unsustainable. It's absolutely insane. So let me show you a couple of examples here from Daniel, great guy to follow on Twitter. I will put his Twitter link in the description here. Here is a listing in Bowmanville, also known as middle of nowhere. Maybe not the middle of nowhere, but to me, it's the middle of nowhere as someone who lives in Toronto. And look, this is a beautiful detached property sold 30 months ago for $794,000. Just recently resold for $1.6 million. So the price more than doubled in 30 months time. Let's get into a couple other examples here. You got one in Georgetown. September of 2020. Nice little home here, sold for $1.7 million. Just sold recently for $2.4 million. We have a semi here in Oshawa, $1.2 million, asking $950, sold $250K above ask. Here is two interior townhome units in Vaughan that sold 5 days apart. One sold for $1.325. And 5 days later, one sold for $1.43 million. And that's just because there's literally no inventory. So we're seeing the lowest levels of inventory that we've ever seen. Alex posted about this on Twitter. Toronto Metro, and this extends out beyond Toronto. This is the case for most outskirts towns. Lowest inventory we've seen going back all the way to 2006, considerably lower than any previous inventory we've seen in the past decade or two. And that's why you're seeing these wild gains on even a week over week basis. You're seeing relatively average, nice family sized homes, but relatively average homes, 20, 25-year-old build selling for $2.1 million all the way out in Ajax. You are seeing, 60% price growth in Whitby for, a relatively small bungalow. So now for a relatively small bungalow, you're going to pay $1.1 million out in Whitby. Here is another Vaughan, $1.05 million to $1.665 million in the span of 14 months, $615,000. Or this homeowner made $43,000 per month tax-free if they lived in the unit, or lived in the home, of course, which I'm sure they did. Interesting post from him here. What $2 million can buy you in the GTA? This is my favorite purchase, 56 Robert Street, right in the core of downtown. Beautiful home. Obviously a townhome, but for $2 million versus out in rural Whitby, $2 million. In Markham, $2 million. And in North York, $2 million. So look, guys, let me show you a couple of charts I just drafted up here. So I took the average selling price of Whitby detached going all the way back to 1996 versus the average selling price of a condo downtown in the CO1 district, sort of the downtown core of Toronto. And you'll note that over time you see fluctuations, right? One asset class might outappreciate the other for a few years, but then it'll normalize, it'll correct. And you kind of see the long-term average is just below 1, meaning that the ratio is 1, so the average price of a long-term over the last 20 years, 30 years, the average price of a detached Whitby was about the same price as the average price of a condo downtown. Then, of course, COVID hits, and you just see our ratio plummet. Right now, we're trading at 0.65, meaning a condo downtown is 65% as expensive as a detached in Whitby, when historically they're about the same price. And it's not just condos, right? So you can't just say, oh, it's COVID and condos, nobody wants to be in a condo. It's also happening to detached. So if you look at the price ratio for a detached in Toronto, right, versus a detached all the way out in Whitby, you'll notice that over time, this was trending up, meaning that detached in Toronto were out appreciating Whitby detached. So you could say that COVID was kind of a catalyst to bringing us back to a more historical ratio. But what I would say is there's just less land available in Toronto, and it's natural for the major metros and financial hub of the country to kind of out appreciate the outskirts towns, is what we've seen when you compare to Toronto detached to London or to Barrie. Both asset classes have done really well over the past 30, 40 years, but downtown, obviously, or Toronto as a whole, within reach of downtown, is going to out appreciate just because of scarcity of land. There's no more room for urban sprawl, so you have to build up. A detached in Toronto is only 30% more expensive than a detached in Whitby, which at our peak, it was about 90% more expensive for a Toronto detached. So I think this corrects. I don't see a way where this doesn't correct. If you look at the last 2 years of gains, it just makes me incredibly bullish on condos. Like CO1, downtown district condos are up 12% over the past 2 years. Toronto condos as a whole, like expanding out to Etobicoke and Scarborough and North York, some of the less expensive condo pockets, you're looking at 16.7% growth. And then you're seeing, Niagara, single family at 57%, London at 60%. Bancroft at 91%. I would be scared to be buying a detached property in Bancroft, specifically, especially a rural property that isn't waterfront, so there's not a whole lot of recreational value there. At a 90% growth over the past 2 years, I think your money's far better placed in condos. And look, condos, I believe they have like such a runway. They have so much room to grow before values are a little bit more normalized here. Now it's already starting. I will say that much. Like, the good news is the condo rip has begun. It started late last year, and it's continuing into this year. Here's an example. We just saw a record-breaking sale in Humber Bay, 840 square feet, sold for $1.395 million. Lower penthouse unit at Eau de Soleil. So this is just a small 2-bedroom right now. Granted, it's a great floor plan. It's a pretty flawless floor plan here. And you have that lake view. You have an unobstructed lake view, which, my experience working with buyers in Humber Bay, especially on the pre-construction side, is downsizers from, Swansea, from Kingsway, Queensway, Central Etobicoke will pay almost anything and almost any premium for that unobstructed lake view or downtown skyline view. But this in particular, like, this sold for $1,660 per square foot. That's a stone's throw away from Manhattan's $2,200 a foot, $2,300 a foot Canadian. This is $200 and something, over $200 a square foot higher than any other sale in Eau de Soleil. We've got, this unit here, a unit at 33 mil in the Distillery District. It was purchased in April of 2020. They renovated the unit. It looks much nicer now. Great renos, but they updated the unit and sold for $1.2 million. So from $807,000 to $1.2 million. And here's an example at 8 Charlotte, obviously one of the best most popular buildings in the entertainment district. This unit here sold for $1.375 million, was asking $999K. And most, the previous sale on the unit back in October of 2020 was $1.055 million. Worth noting that this view is actually getting blocked by a pre-construction development. But regardless, anyways, the point is you're starting to see the condo market really pick up. And so I think sentiment has shifted and people are coming back to the office, and you're starting to see that growth downtown. But I think we have so much room to grow. That is all I've got for you this week, guys. Let me know what you think in the comments, and I will see you guys next video.